Welcome to Gold webinar. This is the third week, last week, third week of no, fourth week of March. So a couple days next week, the week after that, and then we're in April. Yeah, welcome to the fourth week of March webinar for gold analysis. If you guys remember, we were talking about gold sells from there down to here, and then over here we saw a reversal in price action. Right, market went from creating lower highs. Right now we're seeing higher lows. Right, we were first seeing lower highs and lower lows being printed. Right here, you saw we started losing a little bit of selling pressure for now. Right, as you can see, candles started getting compressing over here. And then after, where we landed into was this weekly level, weekly daily level right here. Right, so and what we saw after that was market structure and intraday time frame started shifting. So we got higher lows printing, right? We were observing these levels, seeing what would happen. Got a higher high. We broke past this region, right? Got a higher high at this market structure. Same market structure is just working in play, right? Institutional levels over here, got a retest. And this was even on Friday when Thursday, and I was like, yo, we might see a push down for better buys, right? Because we just approached this area. So price went down for better buys, just like I explained in the webinar, and it like followed through, right? So, and that's where we left out. We're currently in a bullish market structure intraday, right? Overall, we're still in that downtrend, right? This might just be a bigger retracement, who knows? But we'll look at both scenarios. And we can start off by removing all of these. We'll get back to it. So monthly candle, we got a week, 2 weeks left. I don't know, like a week and a half, sorry. I just looked at the calendar. Week and a half, monthly low right there, solid, right? Monthly candle bodies, where are we on the weekly compared to that? Makes sense, we're on our way there. That was a previous November low last year. Also works with solid market structure, see? Daily candle bodies, drawn perfectly there. So also here, price activity here in July 2020, where we pushed off, right? Candle body closure here, candle body closures there, dropping into 12 hours. And now I'm working our way down. You can start to see there's a little more levels when we come down into intraday, right? It will come down to 4 hour. You can see the wicks here from November 30th, 29th, 30th. So those are still solid levels too, right? So as you can see, wick there, here, right? Over here, it lines up with this candle body. 64. These are still 100 pip range, right? Still massive ranges, but as you can see, we still got more levels right here on this candle body. We saw a reject on Friday, right? We'll adjust that one because it did go a little bit higher, and we'll see exactly, okay? But there was a supply there, right? Over here, 3940 level, right? We'll fix that up. 1700, this candle body, 1680, right? And all the ones in between, this right here, right? We got 22, 22, 23 area, like from 20 to 23, you know, that area right here, right? You see it broke down, retested several times above here, and then came down, retest, and that's the higher low that I was talking about on Thursday, right? The better buys, then price broke up. You even see 4 hour closes above here, next 4 hour candles retest that market structure, and they close above and push up. So from that, oh, and there's some more right here. This price action, 1710, right? Yep, 1710 is a very good one that we saw play through, right? So as you can see, market structure moves perfectly within these levels, right? That's why we were able to call that, because we saw the bigger supply here on the hour chart, right? And as you can see, we saw that supply. And even if you could have gone down into the 4 hour, you would have seen that supply level. So market tapped it, right? And this level here was our 4 hour candle body level that we just drew right at that candle body, right? So if you look at it, that's perfect price action at play. And you can't tell me these levels don't work. Just tap the supply, right? Initially, this is where selling started happening, price moving up and compressing. So it's showing you that bulls are losing momentum. Second phase of initial selling, second phase of selling starts, right? Wow, after we tap into supply, more selling takes in. And then we created a lower high right at this key level, right? This key level and right at the candle body key level from 4 hour, right? And then we reject, boom, start closing below this key level, right? From right here, 17, it's like 1740 area. That's what we had it at. 1740, start closing below here, right? And now where do we go? Next key level, 1720 to 25, you know, that in general area, this massive area, because like wicks here, right? So see, that's what the level that we have coming up, but these are still massive ranges, right? These are still 120 pips. This is 170 pips, 110, 110, right? So we could even adjust this level so it's a bit higher. 1 second, you can adjust this level so it's a little higher, right? Taps there, cool, right? And then, so when we start looking at scenarios, is what we have coming up here on the left is a valid supply level, right? It's this general area. It's because it expands that weekly. You see how weekly candle, like they were wicked there. So there's some ways that this plays out is if it pushes up and then comes down, right? Sets up for lower high and comes down. If we're looking on the weekly time frames, right? Otherwise, what we might see is we push up here, create higher low, create market structure, and then we start going up, right? Wherever we go up to first would be like this wick here, right? Then this price range. You have all these price ranges on the weekly, right? So, but what we can start visualizing is, okay, but currently we see momentum building up for the upside. So what if we were to go bullish? Then we would have to see a strong bullish close, right? Some strong bullish price action, and then start breaking these levels, and then we start riding the waves, right? And we catch it on the way there. So currently what we see is 4 hour price action is quite bullish, right? And we have this level coming up. I still think this is a valid supply level because there's a lot of price activity here that happened before this sell move, right? Before this move started, this entire move started, there's a lot of price activity here. So there's still supply entering the market at this point, right? And if you're going down to 30-minute, that's very clear. Look, a lot of price action is consolidating. Orders are entering the market. Orders accumulating, right? So this is like, if you're talking about it in Wyckoff, this is redistribution, and price is just consolidating for continuation. And then we saw a 500 pip sell off, right? And the price came back up here in this general area, and then tapped supply, found more supply, and we pushed down, created a new low, 700 pips. So you see this general area is a solid level, and we've narrowed it down to like 50. If we come back here, 54, you know, 54 we got. Oops, let me observe this on the 4 hour. Got 54, we got 64, 74. So these are still 100 pip ranges, right? So when we start visualizing it with these 100 pip ranges, it's possible that, yeah, maybe that we'll see a sell-off, sell move, right? That type, let's say, pushes up, then you'd have to see how it reacts here, right? If it reacts here, then it sells from here, then it's most likely going to go down here, right? Which would be the next key structure, key level, right? But let's say price was to continue bullish. Where could you enter? Okay, let's see we break past this high, react to here. You don't have to take the sell. You can wait for the buy that might happen over here. We're just waiting for price to reach our key levels, right? Let's say pushes up, does the same thing, retest, and we're still going bullish, and then pushes up, you know? Who knows? So, but we have our key levels, or every time, right? Every time we make a higher high, price retraces to the next key level, creates a higher low, and then eventually goes and makes another higher high. What happened? We created a new higher high, right? Then we went down, created a higher low, and now same thing's happening, eventually working its way to create a new higher high. So if it does create a new higher high, first what we can see is we would have to have a breach of 1750 for that area, right? This general area, and then have to create a higher high, most likely at 1764 area, right here, the supply level anywhere here. And then if it was to go higher and higher, 1774, but we would still be having to watch market structure and how it develops at these areas. Because let's say price is just setting up for a bearish move, right? And then we start seeing bears kick in, and then we start our way back down, right? So let's say something that could happen too, and all we would do for that is just watch the key levels, or maybe something like this, make our way up. We're still going, push up, and then eventually like we keep going up, and all we would be doing in both these cases is we would be watching our price levels and just how market could react to it, right? Because currently we're showing bullish pressure here, right? Same thing here. Last time we tapped here, and then we saw a little bit of consolidation in this area because it's known to be an area of interest, right? This entire area is a strong decision point for markets. And since we closed above here, we started continuing up, right? So when we look at this on yearly, you see how the yearly candle tapped the candle bodies here, and then it retraced up. So now we get thinking, if this is where gold goes long-term bullish, this is going to be key areas to hold on to these buy positions so we can ride them up to, like, if we're looking at weekly levels, ride them up to like 1787. That's over 1,000 pips away. So no, it's not. Fuck, that's 400 pips, but like your levels are a little bit higher, So all these weekly levels like 1825, 1850s, and you don't know those levels will come sooner than right? But otherwise, it could just be setting up for those premium sells. But all we're going to be doing is just watching how our lower time frame price action reacts to these key levels, right? And you can mark them up, send them to me, but these are the ones that I'll be using, and I adjust them. I adjust them very minorly throughout the throughout the week. Like for this one, I had 1752. That's where we created that lower high exactly because I did it off of 4-hour candle bodies right there, over there. But then you see it had to readjust it. But yeah, other than that, like all we're gonna be watching is price action. Let's say we can create a higher high. That's 64, retrace down, market structure, right? Eventually we'll make our way up. Or if not that, then watch for potential change in market structure. And at that point, we would just be watching how price reacts to key levels and how intraday price action forms, right? But this is a solid demand area. So once this rejected, so the same area where we saw initial buying at the federal statement, right, FOMC, and then back on Friday, March 18th, price came down here, retested it, and then pushed up further, right? So this is a solid demand area, which tells me that most likely we're going to see a higher high made. I'll be watching all these price levels here and then trying to take buys in between if we see bullish action, bullish price action. So 1764, 1774, 1751-ish, so 1754 area, and all these ones in between, right? But yeah, that's my higher time frame bias on gold and analysis on gold, and we'll just be observing and monitoring and updating throughout the week. Take care.